In today's video, we are going to be learning two things. What is the stock market, how to invest in it, and if you stick around long enough, there will be a bonus at the end. So what is the stock market? The stock market is basically a platform that allows individuals, investors, and traders to meet to sell shares of publicly listed companies. What is shares? A share can be defined as pieces of a stock. So think of it like a crayon pack. A crayon pack is only a crayon pack because of the individual crayons inside. Take away the crayons and it can't be called a crayon pack because there's nothing inside. So extrapolated into the scenario, shares are the amalgamated form of stocks. So put a lot of shares together, then you can call them stocks, a company stock. A company can only list the stock if it's publicly traded, if it has only IPO'd. So before you IPO as a company, you have to do something called the underwritement. Underwritement is basically when you contact the bank, it values your company based off of metrics like the books, your financial statements, your what you have in inventory, etc. And notice these metrics and or this valuation process can vary according to different banks, but you get the point. It's basically to evaluation process of how much the company is worth. Then they can give you a value in which you list that value on the stock market, on the stock exchange. Basically, stock or shares, the stock market at its core basically functions on supply and demand, varying within prices and market reflecting market conditions. If you go to the stock market or any ticker symbol, you see it fluctuates within time. So that fluctuation is reflecting market conditions, demand and supply. That's why Amazon stock shot up by 30% when they were handing out those stimulus checks, because everybody now has this cash and are throwing it into the stock market, therefore inflating the price because, hey, I have this cash, you have this cash, I have something you want. Why not go treat it like an auction? The highest bidder gets the commodity. So everyone is bidding this stock up because no one wants to miss the chance to invest. So basically demand and supply between investors and traders, between peers. So how do you invest in the stock market? This is something that has baffled me for a very long time. I have money. So how do I invest in the stock market? Do I go to the individual company and invest? Like what does it mean? The first thing you have to understand is there's no such thing as investing in the stock market from a literal sense, but there are things you can invest in. Does that make sense? There's something called a ticker symbol. So a ticker symbol is basically a unique symbol of a company or a company stock that gives you access to that asset class. So for instance, Tesla's ticker symbol is TSLE. So if you're investing in the ticker symbol TSLE, you are acquiring a stake in Tesla. So if you purchase one share, a share is literally a piece of ownership. So if you purchase one share, you're literally an owner of Tesla. But that does not mean you can go out and claim ownership as the title would denote. But you are you are only significant to the degree and the portion of how many of those shares you own. So literally, from a literal sense, you can say, I own Tesla. Elon Musk works for me. But to the degree you can push him around is how much of Tesla you own. So a share, if you, the point we've been able to establish now is the share is an amalgamated form of a stock. The second is a share is a piece of ownership in any asset class. So shareholders get rewarded either via dividends or stock options. This is something that is complex, it's beyond the scope of this video. In subsequent videos, we'll make uh, videos explaining all these esoteric concepts. But we've gone over what is the stock market, what are shares. We're talking about how to invest in the stock market now. So how you invest in the stock market is basically through something called brokerages. Brokerages act as the go between, the intermediary between you, the investor, and those companies. So their incentive to execute this transaction is for every transaction you execute, you pay a transaction fee, a trading fee, a purchasing fee. So basically, to keep their business in a going concern is to charge you those fees. So you pay fees in order to get access to company stocks. Now, what is the best brokerage firm? I'm sure that's the next question. Well, that's the research you have to do and the conclusion you come via yourself. So Google what is the best brokerage firm in my current location. Once you've had that Googled out, take the top three. And what I'm about to share with you are the metrics you use in filtering the brokerages firm and choosing the one that best suits your interests. As you know, investing is a very subjective game. I can't tell you want to invest because our risk tolerance varies. Our goals, our investing goals varies. Your goal might be to get rich. My goal might be to just preserve my money, or I've gotten to a point where all I need is a 5% return in order to compound my wealth. Your goal, conversely, might be how can I make 20%? How can I get rich? So you can see that our investment class or our choice of investment will be different because we have different goals. So once you've had that found out, the first filtering process would be their fees. How much fee do they charge you by per transaction? How much do you pay in tax? So once you've had that figured out, contract it amongst the brokerages you're considering. You had that figured out, you pick the brokerage firm that has the lowest. The second is security. There's no point in getting low fees if you get wiped out by a brokerage firm. So I would recommend that you ensure that the brokerage firm you pick is insured by something called the SPIC. The SPIC is a firm that insures brokerage firms and keeps customer stock independent of the brokerage firm. So if your brokerage firm gets crashed or gets wiped out due to mismanagement or other miscellaneous, your stocks are still safe and it insures up to $500,000 in cash, up to 250 or $500,000 in cash. Perhaps you just deposited money into the stock or you have some money in the brokerage firm in order to pounce on investment opportunities. So that can be seen as, or that can be one way why you would keep cash in a brokerage firm. So if the brokerage firm gets wiped out, by some alchemy, your cash can be insured up to $500,000. Yeah. I promised you at the end of the video, that's how to invest in brokerage firm. So I promised you at the end of this video that there will be a bonus. The bonus will be why invest in this stock market? What are the benefits? Because it is the easiest way to make money and it is the easiest way to get maximum return on your money. The stock market has provided the best return more than construction, more than real estate, and more than all other asset class. And if you look at it from an objective perspective, you see that the stock market is a place where you can 50x your portfolio, 70x your portfolio, 20x your portfolio. Look at Meta. I bought it when it was still $126. Now a share costs $500. Now I'll 5x my portfolio without having to do any work, having to put in any effort, just chilling at my house. So stock market is a place you can take advantage of these heinous returns without having to put in direct effort aside from your study and analysis. So once you are able to figure out what is best for you to buy, it's not like forex, it's not like all this trading where you have to sit down looking at a chart like a fucking moron. No, it's all about establishing your base. And once you buy the stock, you just leave it and watch it. Then maybe it gets you your return according to your analysis, maybe not. So it's the best place for you to make money. As always, my friend, if you've enjoyed this video, comment down below what you would like to see in the future. I'll respond. As always, pleasure speaking to you. See you in the next one.